All right, gangsters. We are back. We're live. It's 5 p.m. Eastern. It's Tuesday night, middle of earnings season. Super excited to be here. I see all the pounders are in the live chat. Want to say what's up to a few of you guys. Mark Aguilar, what's happening? Jack Rosenfield, good to see you. Magnus Cliff, Doc, Lurking Caro, I see you, my friend. Lance Howe is here. Nicole's in the chat. You all say what's up to Nicole. Policing, keeping everything cool. We got a full house tonight. Really glad to have you guys with us. You know how much we appreciate it. C. Marie, good afternoon. Indeed. Tyrone Ross checking in. All right, everybody's here. I just spent the last 10 minutes watching video clips of Hunter Biden explaining how to cook crack. I don't even know. This seems like the craziest time of year right now. Every insane thing that could possibly be going on is going on all at once. Obama's on the tape today.
What do you mean?
Like Trump just like outright was like, you did a treason. You invented the Russia hoax.
Right.
It's wild. But wait, before we deviate, and we have to shout out the sponsor. I do want to say, and I see everyone in the chat talking about this. Rest in peace, Ozzy Osbourne. We were talking about this backstage. People don't even understand. Ozzy Osbourne is the original internet. So when I was like a little kid, like this was your currency, the craziest story you could think of to tell about Ozzy Osbourne. And all these stories were passed like oral tradition because there's no internet. He bit off a bat's wing on stage, which actually is true. He got arrested in Texas for pissing on the Alamo. He snorted a line of ants like backstage at a concert. There was no internet. But every kid, even kids that didn't know what Black Sabbath was, had an Ozzy Osbourne story. And if you met somebody, like that would be like you would trade Ozzy stories. Like it's insane how large he loomed over our childhoods. And who would have ever thought that health nut would have kicked off at 76? I would have thought he had way more time. But hey, this is how it works. So R.I.P. to the Prince of Darkness. Michael, you had something you wanted to get off your chest?
I did. I don't like that shirt. That's bad juju. There's no reason to be wearing that right now. Market's in turmoil. It's
ironic.
The opposite. Okay. Well, I don't like it.
It's ironic.
If this is the top, I blame you.
Hey, we refreshed the compound store for the summer. Nicole wanted me to mention we restocked the hats. I know those were sold out. The hats are back. And here's some all-new merch you may not have seen before. The official Compound Beach Towel, designed by our own in-house design guru, Daniel Para. The Series 777 t-shirts, and brand new Animal Spirits merch. So go to idon'tshop.com, idon'tshop.com, if you want to see what's new at the Compound Store. Okay,
I definitely don't shop.com. Today's show is brought to you by Betterment Advisor Solutions. If you happen to be thinking, there's got to be a better way to grow my IRA, you're not alone.
Did you say RRA?
I did. It's always hard. Come on, three letters.
With Betterment Advisor Solutions, we do the heavy lifting so you can focus on what matters most, your clients. From improved service that makes asset transitions smoother to fast, paper-free onboarding that delights clients on day one, we've built a digital-first platform designed to streamline your operations and make life easier.
That's right, Josh. Now, if you're thinking, wow, they take the paper out of paperwork, then you're right. Grow your RIA your way with Betterment Advisor Solutions. Learn more at betterment.com/advisors. Investing involves risk. Performance
not guaranteed.
Performance not guaranteed.
All right. We have a packed show. We have so much to get to, and I'm really excited to tell you we have a late addition to the show, Doc, because I couldn't let it go without mentioning Mohamed El-Erian. Like, came, you know that like tweet format where it's like nobody ... and all right, so
he's
today,
the Magic Johnson of finance.
This guy just like
a finance Twitter, I should say.
All right, put this picture up.
What did he do?
Here's CNBC covering it. Top economist Mohamed El-Erian says Powell should resign to preserve Fed independence.
Whoa, what?
Quite a take. So I didn't see the tweet. I just saw the headline, and it sounded backwards. And then I read the tweet, and it was backwards. I'll read it. This morning, this is Mohamed. This morning, Trump criticism of both Federal Reserve Chair Powell and the institution itself has broadened to include mission creep and the effectiveness of other officials. The developments of the last few days reinforce my view. If Chair Powell's objective is to safeguard the Fed's operational autonomy, which I deem vital, then he should resign. I recognize this isn't the consensus view, which favors him staying until the end of his tenure in May, nor is it a first best, which is simply not attainable. Yet, it's better than what's playing out now, growing and broadening threats to Fed independence. So he's basically like, to save the autonomy, LOL, the independence of the Fed, they have to, Powell has to step down and do what the people who are threatening the autonomy of the Fed want to have happen anyway.
I don't get it.
Does Mohamed want the job? It's a great audition tape. Maybe the best audition tape possible. The only way it could have been better is if he did it on Truth Social and not X. But that's one hell of a way to kick the door down and say, hey, remember me?
Wait, Josh,
I'm
you
available.
forgot the last part of the tweet is, as to market reaction, most of the frequently mentioned candidates to replace Chair Powell would be able to calm any potential market jitters.
Disagree.
What jitters? There's no jitters. There's no
Oh,
jitters.
there would be. No. He's making the point that he understands the market would freak out a little bit if Powell resigned because he was bullied out of office by the White House. And he's saying the Fed has a deep bench. Don't worry. They'll put Waller in and everybody will be cool. No fucking way.
All right, whatever. I like Mohamed. I don't understand this.
I think he wants the gig. And why wouldn't he? He'd probably be good at it. I mean, who's been watching and paying closer attention and speaking to more central bankers than Mohamed El-Erian over the last 25 years?
I'd be happy with his assignment.
I think that would calm market jitters. It's just a weird take. It's really a bad precedent because what do you think, the Democrats aren't going to do the same thing? Like that's this is how it works now. We can't fire the Fed, but we can bully them to death and pick apart their budget and harass them personally, and we'll get rid of them one way or the other. I don't feel like the market would get over that so quickly. But what the hell do I know? They'd probably buy it. It'd probably new record highs in stocks the day it happens. Who knows? You know what the Fed should do to preserve its autonomy? Not have Powell step down. Cut rates. Cut rates 50 basis points. Shut everyone up. It's not going to change anything. You're not creating inflation by taking Fed funds from 4.5% to 4%. I'm sorry, you're not. It's just not how it works.
Can I throw out an alternate view?
Yeah.
If they really want to preserve their independence, take rates to 0.
Right. That'll produce a great outcome. I really don't think the Fed can adjust interest rates by 25 or 50 basis points and have a marked impact on inflation. I don't think it'll hit expectations. I don't think it'll do anything, quite frankly. It'll make bonds slightly less attractive, and maybe it'll produce a 2-day rally in the home builder stocks, and then everyone will forget all about it.
You know what? I feel like this is tired. We're all tired of talking about the Fed.
Fine.
That was a 2022 story. It's enough already. Who cares?
All right. Next. Consumers got their swagger back. This is the Wall Street Journal. When President Trump slapped tariffs on nations across the globe this spring, many economists feared higher prices and spending cuts would flatten the economy. Consumer sentiment collapsed. We talked about it here. The S&P 500 fell by 19%. In 2 months, the world held its breath and waited for the bottom to drop out. But that didn't happen. Now, businesses and consumers are regaining their swagger, and evidence is mounting that those who held back are starting to splurge again. Anecdotally, do you see it? Do you feel it?
No.
You don't at all in any way. I totally do.
Okay, tell me.
I think people that are stock market Americans are like game on. I feel like a switch was flipped. I don't think anyone
feel it. I mean, I feel it in the stock market, I guess.
Well, no, but that's obvious. The
But
point
like in day to
is,
day,
did the stock market? We just had a 26% rally in the S&P 500 in, I don't know, 44 days.
Oh, you know what? I forgot I bought a new house. You're right. I do feel it.
You just bought the biggest house in the town. All right. I really feel it. And I don't think anyone's like, oh, my stock portfolio is back up, I'm going to go back to acting like it's 2024. I'm not saying that. Like, I don't think anyone explicitly is like, oh, thank God my stocks are back. I just think, like, when I look around, and I'm very much on the scene. I'm in Manhattan. I'm on the Upper East Side. I'm in East Hampton. I'm at luxury boutiques all over Europe.
Roslyn eating dinner.
No, like I saw your dad last night. But I feel that is a sigh of relief on the part of, let's say, the top third of the population, and it's like game back on.
Okay.
You don't feel it at all?
I don't know. I have to think about it.
Okay. Here's more. J.P. Morgan reported unexpectedly strong earnings. The bank's economists no longer expecting a recession, they said. Here's Jeremy Barnum, the CFO. After the initial shock of tariff policy changes, everyone kind of went on hold, but, quote, at a certain moment, you just have to move on with your life. And it does feel like some of that is happening just because you can't delay forever. Totally agree with that, too.
So I made a meme. John, chart on, please. Meme on. It's incredible how much. Thank you. So for the listeners, yeah, it's Neo stopping all the bullets, and it says the American consumer. It is incredible. Meme off. How much has been thrown at the American consumer, and I understand there are people struggling. There always are. Remember excess savings? Wasn't that supposed to run up like 3 years ago? Like
still working that down.
So we just won't stop spending. I know retail sales were like a little bit soft. If you looked under the hood, whatever. We've been through a lot of shit and we just keep taking it. So you mentioned Jeremy. I listened to the conference call. They spoke about the consumer. Quarter on, please. So the CFO of JP Morgan was asked about the consumer. All right. He said, so let's do the consumer quickly. I think we talk about this every quarter. It's obviously a very important question. We look at it very closely. It obviously matters a lot for us as a company, but we continue to struggle to see signs of weakness. The consumer basically seems to be fine. Now, a few things are true. Like if you look at indicators of stress, not surprisingly, you see a little bit more stress in the lower income bands than you see in the higher income bands. But that's always true. That's pretty much definitionally true. And nothing there is out of line with our expectations. So it's not just rich people. Obviously, they're doing just fine with their 401ks and their stocks and everything like that. But it's everywhere. Ally, chart on, please. And Josh, I know you have something in between, but just Ally, chart on. So Ally, the biggest part of their business is auto loans, a lot of subprime in there. And their CFO said 30-plus day all-in delinquencies of 4.88% represents the first year-over-year improvement in delinquency rates since 2021.
Improvement.
A positive inflection point for credit performance. Yeah. Wait, you're saying that like it's a bad thing?
No.
Oh, yeah.
Like nobody was expecting that.
Since 2021.
Yeah. More from the Journal. Credit card spending, according to JP Morgan, was up 7%. This is quarter over quarter. So 7% over the same time, 2024.
Yeah, it's remarkable.
That's everybody. That's not just the wealthy. Here's more. U.S. small business owners, 1,267 in the survey. 44% said demand for services and products is higher than they anticipated in January. A third were extremely optimistic that business would be better in the next 3 months. Just under a third said they would add more employees by then. That's small business. The transcript is amazing. We shout them out all the time.
Yeah, fantastic.
Like, here's Jane Fraser from the Citigroup call last week. The strength of the U.S. economy, driven by the American entrepreneur and a healthy consumer, has certainly been exceeding. As I've been speaking to CEOs, I've yet again been impressed by the adaptability of our private sector. Stock market's bailing us out. American Express, same thing.
Wait, what do you mean stock market's bailing us out?
When she's talking about the American entrepreneur, what do you think she's talking about? She's talking about all these companies that are finding ways to continue to do well. You know, American Express echoed that. U.S. Bank Corp. Consumer spend remains resilient. Wells Fargo. This is Charlie Scharf. As we look ahead, what we see regarding the health of our clients and customers has not changed. Experian, the credit reporting. Quote, I think the passage of time, the U.S. economy continues to be strong. Regions Financial, same thing. These people aren't being paid to say this shit. Right.
It's all about the labor market. That's it. What derails us? What stops us from spending?
So now let me throw a monkey wrench in. And I shared this chart on social media yesterday and got quite a reaction, but what do you want me to do? It's the data. I think there are two types of consumers. I think there are stock market participants and everyone else. Mm-hmm. And it's almost childish to say people at the lower end of the income distribution are struggling. Like, when are they not? That's definitionally, it's another tautology. Like, definitionally, if you're at the lower end of the income spectrum and prices in the economy are rising, you're struggling. Period. End of story.
Not to be a dick and be a downer, but remember Eisman was talking about how people that always yell about the debt, it's like virtue signaling. It's the same thing for finance people talking about the bottom decile of income earners are struggling. It's like, no fucking shit. Like, obviously.
Yeah. Oh, I agree with that.
No, I care about the bottom 10% more than you do. It's like, dude, come on.
Yeah, and we talked a couple weeks ago about how the spending of that consumer does not even filter into the S&P's earnings. Like, it doesn't even show it. I think it was Savita Subramanian.
That's the bottom quintile, I believe.
It doesn't even show up really. Yeah. All right, but anyway, here's a chart from the most recent University of Michigan release. I think this came out Friday. I mean, this is like early, but we talk about K-shaped recoveries where one group is going in one direction, the other group's going the other. Whether or not you're in the stock market dictates what your sentiment about the economy is. And tercile, for those who don't know, this is the top tercile of people who own stock. You can see their consumer confidence is ripping, whereas the people with no holdings in stocks are at all-time lows, basically.
What's
from
a tercile? Is that the third?
Tercile is a third. I had to look that up. I never even heard that term. So the top third of the country, who probably own 80% of the stock market, let's say, I'm making that up, but I bet it's true. Peter Bookfar wrote about this, chart off, helping confidence here too continues to be rising stock prices with sentiment gains among stock market participants. Those without stock wealth experienced a sentiment decline, however. So it's two different. So when people say the consumer is this, the consumer is that, which consumer? The stock market American or everybody else? And I don't want this to be true. And I heard you guys on Animal Spirits last week. You were screaming at your audience who all own stocks, get in the market. You were talking to Ben. But like, what other way do you need me to say it? Like, we basically have a situation where people are spending with abandon who have stock exposure. And for everyone else, it's harder to imagine why you would want to increase your spending right now.
Yeah.
So it's tough, but I agree. It's a little bit virtue signally, so I don't want to spend any more time on that.
Good. Okay. What is your read so far on earnings season? I know we're early, but
I think it's pretty good. Expectations are rising as companies are reporting, like full quarter expectations. Analysts are taking numbers slightly higher, but the earnings growth rate is at a multi-year low. So I think right now the expectation is 5.6% growth for this quarter, which would be one of the lower growth rates for any quarter over the last 3 years. So it's good. Like, companies are doing the number, they're exceeding. The reactions are a little bit punk, and it's not that fast of an increase compared to what we saw 2 quarters ago.
Where do you want to start?
I guess let's do. All right, let's start with some top line stats. This is a huge week of earnings. 20% of S&P 500 companies are going to report this week. 12% of companies have reported already. Sean put this together for us. Blended earnings, which is actual earnings plus estimates of companies that still haven't reported, for S&P 500 companies grew 3.3% year over year, 50 basis points above the estimates at the beginning of the season. 82.3% of S&P companies have beaten earnings estimates so far, which is pretty good. The 5-year average on that number is always 77%. We joke about that, but that's what it is. So we're slightly above. Actual earnings, take out the blend. The 59 companies in the S&P that have reported grew 2.6% year over year. So, and keep in mind, we haven't had any big tech yet, which we're going to get to in a minute. Analysts think S&P earnings grew just 2.6% in an aggregate year over year last quarter, the lowest bar since the fourth quarter of 2023. And Coming up, we have Amazon and Tesla tomorrow. I think both will be after the close. So if you're listening to this on Wednesday, they haven't reported yet. Let's get into Amazon. Let's put this graphic up. So guys, like just as a level set, revenue $162 billion, which would be 9.5% top line growth. EBITDA $38.3 billion, which would be 14% growth. EBIT 14, and earnings per share should be up 3.9%. The bar does not appear to be extraordinarily high from my perspective as an Amazon shareholder. Let's put this price chart up. Look, I think the stock's going to struggle if it could even get into that old high from January and February, which was about 240, 242. I'm not sure if that's easy to see in this chart. But you have a golden cross in the stock, which we talked about with JC last week. And again, I think you have a company where the expectations aren't like wild. And I don't see any reason why Amazon shouldn't have good guidance, just given what we're hearing about the demand for AI and cloud. And AWS is the biggest cloud player on earth, or AWS neck and neck with Microsoft. So that's where I am with that.
The stock has not done very well at all. We both own the stock. It's up 45% over the last 5 years.
Underperformed in the first half for sure.
But over the last 5 years, it's only up 45%. The S&P is up double that, and the Max 7 is probably up a lot more than that. To me, the thing that I'm most interested to hear from Amazon and Google and the other tech giants are their guidance towards CapEx and hyperscaler spend, like what they're going to be spending on all these data centers. Because at the end of the day, we'll get to this in the next topic, but it's all about semis and it's all about AI spend. And as long as they don't guide down, which I don't know why you think they would, then we should be okay.
I think Amazon's going to be one of the biggest players in robotics in the world over the next 5 years. They already are, but I think that part of the story is not obvious to people. I think between drones and automated factories and the Zoox automated taxi service, there are a lot of things that Amazon's doing that don't show up in earnings and don't really get that much attention. But I think if people are trying to invest in the future and they understand that one of the biggest themes is going to be automation and robotics, Amazon becomes a must-own stock in a way that, like, for example, Meta is not. Like, Meta is a huge AI play, not really a physical AI play, not really a robotics play. Like, I think Amazon has the potential to be able to separate itself, but not yet. The robotics story is just too early. And again, the stuff they're doing is mostly to save themselves money. That's going to change, dude. The origin of AWS was their own internal computing solution. And one day they said, I bet we can get customers for this if we were to turn it inside out. And the rest is history. It birthed a multi-trillion-dollar FANG company, Mag 7 company. If they decide what we're doing with robotics might be valuable to our customers, like, I don't know what the multiple on the stock should be, but right now it's 36 times earnings, cheapest multiple you've been able to pay for trailing Amazon earnings ever, like on record. And I just think there's a lot going on here under the hood that is not getting that much attention, as evidenced by the share price. So I'm bullish Amazon staying long through the earnings, and we'll see what happens. Let's do Tesla. Why don't you take the reins of this one?
So unlike Amazon, the expectations are terrible here. I can't imagine what they would have to say. Well, I don't want to say that.
Robots.
All right. I can't imagine what they would have to say for the stock to go down. Like, it would have to be really, really bad because they're looking for negative 13% on revenue, negative 35% on EBIT.
These numbers are so bad. Negative 22% earnings growth. Horrible. Yeah. What's right? And everyone knows. Everyone knows.
So I think whatever they report is whatever the numbers are. I don't think anybody's going to care. It's in the price, or it's listen. We know about it. I think what's going to be more important is what they guide to, and more importantly, whether or not investors believe whatever crazy shit Elon says, because he always gets a little wacky on these earnings calls. Like, he says some shit all the time.
Yeah. Well, all right. Here's what he's going to do. He's going to play up the launch of the robo-taxi, which happened during the course of this quarter that he's reporting. Like that's going to be front and center because they did that at the end of June. And you're going to hear a lot of stats about how many rides and customer satisfaction and whatever. There's negligible revenue impact to this. They do not have a lot of cars on the road. It's not a thing that's going to drive earnings this year. But if you're long the stock, it's probably a big part of the thesis. Why? Because you think that there's going to be 1 million of those cars all over the world making money for Tesla. So I feel like that's a really obvious thing that he's going to play up.
Yeah.
I wonder if any of the analysts are going to have the balls to ask him about the tie-up between Tesla and Grok and XAI and Twitter and the whole mishpacha. Like, are they gonna want to know more details about what some of these transactions are meant to do?
Someone will ask.
You think so?
Yeah, I do.
Okay. Look, I have nothing to say.
Okay.
I'm not a Tesla investor. I still don't get it. I never have gotten it, and I wish the longs luck. This is probably one of the worst estimate rundowns for these mega market cap companies I've ever seen going into a quarter. And the stock price is fine. Like it's fine. It's not at an all-time high, but it's also not down, right? Like it's okay. I think it's up on the year.
If you tell me stock is up or down 10%, I would say up, just because I feel like all the bad news is baked in.
Yeah, that could definitely be. I wouldn't argue with that.
All right, I want to do Netflix quick. So Netflix closed at a multi-week low today. Big deal. The stock is at a monster run. It's 11% off its highs. But they are just really impressive. Continue to fire on all cylinders. I pulled some stuff from Alex Morris. Chart on, please. This is the sequential net ads, which they stopped reporting in the fourth quarter of 2024. But look what they did. Look how they responded to the slowdown. They just absolutely executed the shit out of this business. Super duper impressive. The next table.
What is this?
This is net ads. Remember, during the second quarter, it was spring break. They reported a loss or a decline.
Subscriber ads.
Stock got killed, and they just murdered it. They did exactly what they had to do.
Yeah, this is epic.
All right, next chart. Annual revenue per sub was $110 in 2016. And every single year, well, not every single year, but over time, it's been super duper impressive. And more importantly, the annual EBIT, so the bottom line per average sub, has gone from $5 in 2016 when they were spending gobs and gobs, $7 billion on production, whatever it was, up to $37. And then additionally, you could see it in their margins. Just unbelievably impressive execution.
Wait, so you're saying that they make $44 per year in cash flow from each subscriber?
Correct. And they have over 300 million global subscribers.
Does that sound like a lot or a little?
It sounds like a lot if you consider what the cost is.
Yeah. All right. So they're charging every sub, on average, because there's different tiers and pricing, but on average, each sub is $145 in revenue, and of that, in cash flow, they're netting $44.
Yeah, that sounds pretty damn good.
That's pretty good. I mean, that's great, honestly.
But also, put that chart back on, the margin chart. Look at this. I mean, unbelievable. Unbelievable.
Yeah. They
won.
I'm not selling.
They won.
And I saw the narratives about Tesla just had a great earnings report and the stock faded.
Tesla.
Therefore, Tesla, Netflix. Therefore, all the good news is in the stock. Nah, I don't think so.
No, that's not how. Come on, it's up. What? What's it up here today? I mean, give me a freaking break.
Huge.
It's up. It's still up 33% after this pullback.
One of the biggest winners in the S&P this year.
It's up 88% of the last year. I could pull back 11%. Before we move off this topic, I just want to mention, I listen to a lot of financial earnings calls. BlackRock, JP Morgan, Schwab, one other I can't remember. Not surprisingly, a lot of these companies are levered to the stock market and firing on all cylinders, as the CFO of JP Morgan said. They are real. And Morgan Stanley. Shit is happening.
we were talking to JC, and he's like, what's the most, for those of you who haven't listened to the 200th episode of the Compound and Friends that we put out last week, right after this, make sure you go and do that. It was pretty epic. JC was like, financials are the most important sector. And I think like just given like every bull market is accompanied by financial stocks rallying. And my argument is like, no, you have it backwards, bro. When the financial markets are rocking, companies that are in financial services do really well because they feast on that activity. It's like you wouldn't say real estate brokers drive home prices.
Right.
You would say rising home prices and sales of homes is good for realtors. Therefore, the business value of a real estate brokerage rises when home prices rise.
But wait,
I look at the financial sector the same way.
You're right. But to JC's point, it's been a while since financials were doing really well relative to the S&P, because we've been in a bull market for many years, and they had been lagging a lot. So it's nice to see the confirmation.
Yeah, the deregulation story and the stuff that Trump is doing with federal agencies is a really big part of this. They're cutting the regulators' budgets. They are turning down whistleblower cases, according to Bloomberg News. Today, people are bringing whistleblower complaints about companies, and they're saying, "Now we're good." They're going to loosen the lending requirements. They're going to take the yoke off of the money center banks. There's chatter in the market today that Goldman Sachs is getting ready to make a big acquisition. Can you imagine like Goldman trying to buy a company under Biden? It would never be allowed to happen.
What's the speculation? Who are they eyeing?
People are saying they want to do something big in wealth management, either at the platform level or maybe buy a big player. I don't know. What the hell do I know? But like, I'm just making the point, just the idea that we're contemplating S&P 100 financial services companies considering M&A is like a radical change from just a year ago. And that's the Trump effect. And it absolutely is a tailwind for the largest banks. And as a result, most of them are now trading at 1.5 to 2 times book value.
I know it's not a bank, but BlackRock's been pretty acquisitive, especially getting to private markets. They raised the largest private fund ever from GIP, which is an infrastructure fund. They raised $25 billion.
Yeah. Schwab making a new 52-week high today was interesting.
And getting to crypto.
Yep. So a lot of getting into crypto stuff going on over the last couple of days. I saw Western Union made a stablecoin announcement. Maybe they watched our show.
A little too late.
With what's his name from A16Z?
Sam Broner.
Sam Broner. I saw PNC Bank announce a tie-up with Coinbase to custody their banking customers' crypto. So, this is all of this is Block, which is the payments tech giant, used to call it Square, just got added to the S&P 500 this morning.
Really?
Yep, $44 billion market cap. When Chevron closed the deal to buy Hess, somebody had to take Hess's spot in the S&P, and Block was up, so they got it.
Wow.
So these are all directionally positive for the financial sector. My only debate with JC is cause and effect.
No, I get it.
I just think it's backwards. So, all right. Foreign buyers love U.S. stocks, it turns out. Do you remember the conversation we had with Rebecca Patterson? And maybe we talked to a few other people in April and May. And there was a narrative out there, and I would have bought into it had I not seen the data. It was plausible that it was going to be like a slow leak out of U.S. assets for international investors. Like portfolio managers in Europe and Asia were going to lose faith in the U.S. as a result of the trade war, and you wouldn't see like a huge crater being blown in the side of the earth, but you would like kind of see like gradual walking away from stocks and treasuries. So it's the opposite, it turns out. Foreign buyers, including central banks, sovereign wealth funds, but also private investors, like regular rich people overseas, just went absolutely crazy for U.S. assets in the month of May and over the entire preceding 12 months ending in May. just completely invalidating that idea, at least so far. Foreigners now are up to $9 trillion of U.S. debt holdings, which is about 32% of all outstanding debt. And they've been buying more. They're also buying the U.S. stock market hand over fist, which I think helped fuel this incredible rally from April. So we have a chart from Ed Yardeni. Let's throw this up. Ed says total U.S. net capital inflows, including private and official foreign accounts, rose to a record $1.76 trillion over the 12 months through May. So this is right smack in the middle. You have the tariff and trade war. Here, U.S. net capital inflows attributable to official foreign accounts were only $33 billion. So it's not governments. Those attributable to foreign private investors soared to a record $1.73 trillion. It's almost all private wealth buying U.S. stocks from overseas. And I got one more for you. This chart shows the cumulative purchasing over 12 months. U.S. stocks are the blue line. So in case you're squinting, that's $600 billion in foreigners buying of U.S. stocks on a rolling 12-month basis through May. So the trade war, Michael, triggered an upside buying shock from overseas investors. Not a slow leak, not an exodus. And again, this is so far, but like, look at do you see that spike in the blue line?
No, I don't see it.
Noteworthy, yeah?
Yeah.
Not the way that a lot of people expected this would have gone. And when you see something like that, it's hard not to think that's going to continue. What would your bet be that line looks like 2 reporting periods from now?
Turn that back on.
The red is bonds.
It ebbs and flows. I mean, I wouldn't expect it to be higher. Why would it be? They bought the dip. They aggressively bought the dip.
What's notable is that they were selling for most of the 2020s decade after the pandemic. They basically spent the entire time net selling U.S. stocks. And just the enthusiasm with which they've been buying stocks, looks like since December of 2024, is pretty. I mean, these are record numbers on this particular metric going back 30 years.
Yeah.
So not every narrative that makes sense. Here's my takeaway. What do you think? Not every narrative that makes sense to you as you're told the story ends up coming true. And in this case, it turned out to be a polar opposite.
All the time.
All the time. If it makes sense, it doesn't make money, is what Mark Fisher told us.
Jamie, on the conference call, they were talking about like market expectations for Fed cuts, and he goes, "Well, whatever the market's expecting, you could toss it out the window." So, all right, let's talk about the most important subsector. There's no debating that. Semiconductors. Chart Kid made this. Chart on. What we're looking at here is the forward PE coming down from the peak at 35.4 times down to 30.5 times. But the weighting in the S&P 500 over the same time is actually up to an all-time high, almost 13%.
That's a function of earnings growth.
Yes, sir.
The PE ratio is coming down, but the stocks are getting bigger because they're out kicking their coverage on the earnings per share front. And we know it's basically 2 stocks. We know this is Nvidia and Broadcom. Here's Adam Parker. The stock market goes where the semis go. What do you think about that statement? I mean, I said this 5 years ago, the semis and the new transports. So this is not news to us. But basically, like the semis are your guide to where the overall market will go.
Well, the market can rally without the semis, but I don't think semis, like if Nvidia falls a bunch, I think that would certainly put
Market's not rallying with Nvidia
that would dampen the enthusiasm a lot.
Adam says the key for revenue growth expectations for the technology sector, and perhaps the key to success for the entire stock market, is the semiconductor industry. ASML reported, which is not a U.S. semi, and it was a disappointing report, down double digits, the stock. People are waving it away, saying, don't pay attention to that. Samsung is a 14% customer, and there's some China stuff in there. All right, fine. But what he's basically saying is the correlation between the S&P 500 and the semiconductor stocks is always pretty high, but has been particularly high of late, peaking at 0.94 in late June. Several key semi companies report in the next 2 weeks, and we think there's no doubt that it will be hard for the S&P 500 to rally strongly if the semi sector acts poorly.
Agreed.
And he sees that as one of the bigger risks, just keying off that ASML guidance and commentary. Put this chart up. This is Adams. Shout to Travariat and Adam Parker. This is the S&P 500 and the semiconductor stocks, and he's showing the correlation. And last month it hit 0.9, which is almost 100%. That's 90% correlated. So it oscillates. It's up and down. But look at this upward trend stemming from 2016, right? Like that was the low of correlation between the semis and the stock market. And ever since, it's basically been up and to the right, which tells you how important this sector has become, I think, to the S&P 500.
Yeah.
What do you think about that?
I mean, listen, this is very noisy data. Like in 2023, we had a hell of a year and correlation was falling dramatically. But whatever. Regardless of what this chart says, I agree with Adam. I think that if the chips sell off, it would be hard to envision the S&P continuing higher. However, one of the hallmarks of a bull market, and we saw it today, is rotation. And RSP, the ratio, so the equal weight was up 1.27% today. The SP was up just 16 basis points. So it's possible. I mean, I don't know. Crazy shit happens all the time. We just spoke about it. It's not impossible. It'll seem unlikely, but who knows?
Today was a sell growth bicyclicals day.
John, you have that mystery chart heat map there we go. Thank you, John. Great job.
Yeah, look what they did.
This is an interesting day. So NVIDIA, Broadcom, Oracle, Netflix, Meta, and all the semiconductors got smoked. And look where money went. Healthcare, the biggest laggard of the year. Materials, utilities, real estate, energy, banks, like everything was working. So this is, it's a bull market. So,
hey, you want to know my theory on today? Positioning.
I've been saying.
Did you know that 56% of the components of the SMH have a market cap over 100 billion? I don't know how many components there are. I'm guessing at least 30.
Several.
These are big stocks, dude. Like all of them. These are very, very big stocks. And I think Adam's onto something. All right, Japan. We actually did a segment about this here on What Are Your Thoughts? We talked about this thing that the Tokyo Stock Exchange did. And just to bring people up to speed who missed that, they demanded that the companies listed on the Tokyo Stock Exchange that had a stock price trading below book value put together a written plan as to how they were going to fix that and improve the valuation that their stock was getting in the markets. And they took those written plans from these companies and they published them right on the website. And Michael, I'm happy to report it really worked. Bigly. Like this is a great model for some of these horrible, moribund international stock markets that are just now breaking out to highs, but like have tons of low discounted, low value stocks. What they did actually worked really well. So they launched this a couple of years ago, and they made companies say like, this is our plan. We're going to do dividends, buybacks. We're going to sell off non-core assets. We're going to make business improvements. We're going to provide regular progress updates, blah, blah, blah. Put this chart up. Here's MSCI Japan. I don't want to like confuse correlation with causation, but I do think there's a lot of causation here.
Sure, yeah.
Right? And there's a couple of examples, which you don't have to get into like all these individual examples, unless you think that some of them are worth talking about. Sony,
I kind of don't.
All right, so forget that. Let's put up this Nikkei 225 chart just to give people the really long-term view. Last week, the Nikkei took out 40,487, now materially above the old highs from 1989. And the reason this is relevant is, what percent is Japan in the global market cap? Would you say it's 15%?
Is it that big?
Only 6?
I don't know.
Yeah, because I think as China has shrank, I think Japan has grown larger just by attrition.
Okay.
So people with international portfolios have seen Japan become a larger. I think that's right. 2 more charts on this, and we can move on. The first, this is from Verdad Capital. Total dividends and buybacks of Tokyo Stock Exchange listed companies. Just focus on the light blue line. That's the combination of dividend and buyback. Of course, this is playing a big role in the comeback for Japanese
no
stocks.
doubt. Yeah.
That number has gone 10 years ago, 13.4 trillion yen to 28.8 trillion yen. It's more than a double in dividend and buyback activity. So they're shrinking the floats of these companies, which boosts the earnings per share and arguably boosts the multiple that people are willing to pay for them. And, of course, raising the dividend helps too. Here's one more. Here's the historical median shareholder yield for companies by market cap. And what I'm showing you here, large cap is blue, but look at mid cap, orange. Look at green, small cap. Look at purple, micro cap. Here's my question. What if the New York Stock Exchange said this to the Russell 2000 components that trade on their exchange?
I love it. Get your act together.
Yeah.
Yeah.
Publish a written plan. You have all right. Dear small cap CEO or board of directors, probably more realistically, you have a small cap listing on the New York Stock Exchange or NASDAQ, depending on who's talking. You have 0% share price appreciation in 10 years. You're selling at the lowest multiple to book in 30 years. Publish a plan for what you're going to do to enhance the value of your stock for shareholders, or you're delisted.
Now.
We don't want your kind around here. If you're not interested in
72 hours.
I actually would really love the Trump administration to convince the exchanges to look at Tokyo. Why are there thousands of publicly traded companies on the NASDAQ and New York Stock Exchange that are not participating in a bull market that's gone on for 16 years now?
If they don't do it,
what are we
Mohamed El-Erian will delist their companies. All right, let's talk about the Ether machine. This is awesome.
You like it?
I love the Avengers quote.
All right. The Ether machine. So there's a blank check company called Dynamix, which I was pronouncing Dynamics, and nobody's correcting me, so I'm going to go with Dynamix because it's funnier. It sounds like a snack food. But they're merging with another entity to become the Ether machine. The combined company plans to manage $1.5 billion in Ether. So it's going to be the strategy of ETH, right? It's going to be like the biggest, or want to be the biggest ETH treasury.
I wonder
company.
how many employees might a company like this need?
Like 2. One to go on CNBC,
yeah.
and one to keep your filings current with the regulators.
But the founder, one of the founders, is like a super duper rich guy. He invested $645 million.
Andrew Keys. Who is it? Is he a crypto billionaire? I don't even know who that is. He's
a rich. I don't know. Sounds like fun.
It's Alicia Keys' son. He's going to be the chairman. And then Kraken and Blockchain.com are contributing $800 million in equity financing at $10 a share. It's a SPAC, remember. The thing went berserk to the upside. I think it ran 30% the day this was announced or something. And then it's since calmed down. I can't tell what this. So it was just over 10 on July 21st.
This is a terrible chart. Come on, guys. It just de-SPACed. It de-SPACed 2 days ago.
I understand, but I asked for a chart. What else would you show?
Oh, you know what? That's on me. My bad. I misread the dates. I apologize.
I'm just showing the gap up.
No. You're right. I fucked up.
Oh yeah. So all right. So Keys said in an interview, its team's experience with Ethereum will set it apart. Quote, "We've essentially amassed the Avengers of Ethereum," he said. Do they have the founder, the Russian Canadian kid? Is he involved?
Oh, what's his name?
Exactly. It's only the inventor.
The guy with the skinny neck.
Yeah, I don't know. What do you think? Investors want this.
Sure.
They're gonna lever up and start to acquire as much ETH as they can, just the way Strategy did with Bitcoin. That worked. Do you think this will work?
I don't know. Maybe. 50% chance.
All right, sorry. In the chat, Sodak Jason says it's Vitalik.
Yeah, there it is. Sorry.
Is Tom Lee involved in this?
No, I think Tom's in another one.
He has another. He's doing his own ETH treasury.
He's on the board or something. I can't remember what it is.
Okay, cool. When are we doing one?
Tom is in the Thundercats of ETH.
the Voltron. What's your ETH accumulation vehicle? Have you launched? Somebody said our viewers are awesome. We got like 5 people telling us Tom Lee's vehicle is BMNR. Thanks to Ben Cash, Matt Karen, Gangsta Lean, and Midwest Cannabis.
All right, so this thing had a monster pop. It went from like 15 up to 160 down to 40. I don't know, man. We'll find out if investors want this. I would guess that what Michael Saylor did is impossible to replicate. I don't think you could just keep catching lightning in a bottle.
Or, well, wait a minute. What's better, a leveraged ETH ETF, like if such a thing were to be launched, or one of these ETH treasury vehicles where it's not mechanically just like doing the trading based on the spot price, but there's somebody actively accumulating.
You could buy levered ETH on chain. Like, I don't know if people are going to give the same premium to these companies. I suspect that they're not all going to get it. Like, that would make no sense.
Somebody was saying, I sort of agree with this take, but I didn't read the article. I just read the headline and I got busy. But somebody was saying, like, index funds bear the responsibility for the fact that individual investors are paying $2 for $1 worth of Bitcoin.
Yeah, how?
Because now, Strategy's now in the index.
So dumb.
So every time you give money to an S&P ETF, you're buying some Strategy.
Yeah.
So,
I saw somebody tweet like Vanguard is the biggest holder of Strategy. Well, yeah, it's the biggest holder of everything.
It's the biggest holder of everything. Yeah. But like that's partially what is fueling the enthusiasm for these things. They just put Strategy in the S&P 500.
If Vanguard wants to remain independent, they've got to do the S&P 499.
All right.
Right?
I see where your head is at. Let's wrap up. We're going to do Make the Case. I already pitched this in March. I'm bringing it back because there was some news this morning before the open, and I just want to keep people up to speed with my thinking on it. But before we do that, guys, obviously, we are not giving anyone financial advice on the show. When we do Make the Case, this is Michael and I pitching each other stocks, and it's for informational purposes. There's a huge disclaimer below this video and in our podcast show notes making this clear, but I just wanted to reiterate it.
I know, but like that being said.
Well, no, there's even more of a disclaimer. Rocket Companies, which I'm going to talk about, and I've talked about already, also owns Rocket Money, which is one of our sponsors of our shows. So be aware.
Double
this is for
disclaimer.
informational purposes. Do not follow us into trades. Do so at your own peril or potential risk.
But wait,
and
we both own the stock.
Yeah, I know. That's why we're talking about it, because we both own it. But we're not telling other people they should buy it, is the point. But Trump shocked the market this morning. More Trump, I know. This is Bloomberg. President Donald Trump said he is considering a proposal to end capital gains taxes on home sales in a bid to boost the housing market. I have no idea how much money that means back to homeowners who are selling. I got your attention now because you're trying to sell a house. I know I got your attention. Here's what Trump said, quote, "We're thinking about that, but would also unleash it just by lowering the interest rates. If the Fed would lower the rates, we wouldn't even have to do that, but we are thinking about no tax on capital gains on houses." Trump was asked about the plan by another reporter, and that was his answer. And then Marjorie Taylor Greene, one of the more stable House of Reps people, introduced a bill called the No Tax on Home Sales Act, which would eliminate the federal capital gains tax on primary residences.
So the first $500,000 in gains is exempt, is my understanding.
They're saying under current law, filers can exclude as much as $250,000 from taxable income on capital gains made on primary homes. But that amount, which is double for couples filing jointly, has not been raised since 1997. How many people do you think this would even apply to? But like, how many people have a capital gain of more than $500,000 on a sale of a home?
The top 1% of people do.
Outside of New York, California, Florida,
right?
How many people have a $500,000 plus gain where this would do anything for them?
Well, actually, a lot of people.
Okay.
I mean, think about it. If you bought a home 25 years ago and you're looking to sell it today, and you are near a major metropolitan city, there's a good likelihood that your house is over.
I'm so stupid. I'm like asking rhetorical questions, and I actually have the answer here. The National Association of Realtors estimates that around 29 million homeowners could have enough equity in their homes to exceed the cap for single filers. That makes sense. 29 million homeowners as single filers have enough equity where this would end up being a tax benefit to them if they sold their home. Yeah. Single filers. Not everyone who's married files a joint tax return.
Oh, news to me. Okay.
I don't know why, but that's just the thing.
All right. So anyway,
so put the chart. So what do you think Rocket Companies did?
Yeah.
Bang.
Whoa, scared me.
Like, obviously, like this would be if you had to pick a stock that would benefit from this would be, like, to me at least.
And Zillow.
This and Zillow, 100%. I don't even look. You know what? I didn't even look at Zillow. Look that up while I'm talking.
It's up. It was up 3% today.
So Rocket, we first brought to the show. I did this as a make the case on March 25th.
But Rocket is more pure mortgage exposure.
Oh, 100%. It's a mortgage pure play.
Right.
Zillow is a little bit more complex, tied in with home prices. And so we did this. Rocket was trading at 13. That's actually my average cost. We did that in March. And the idea, and this is not my type of stock normally, but the idea is like, you're telling me no one's ever going to refinance a mortgage again? It really looked like the bottom. And Rocket made two really big bets, which I won't rehash because we talked about them already. They bought Mr. Cooper, which is one of the biggest mortgage servicing portfolios in America. And they bought Redfin, which is one of the biggest websites and lead generation sources for realtors, and obviously funneling mortgage leads through there as well. So Rocket did this really ballsy thing at the bottom of the housing market a couple of months back, where they announced two back-to-back huge acquisitions, and they just closed the Redfin one on July 1st. So Redfin is now a wholly owned subsidiary of Rocket Companies, and the Mr. Cooper one, if you look at the share price closing with Rocket's share price, it seems highly likely from an arbitrage standpoint that will go through as well. This administration is not going to do anything to block a vertical merger. So now they're going to go from being the mortgage provider to the servicer, the advertiser, the lead generator for mortgage brokers. They're building like the premier vertical stack for the mortgage market. One of the other reasons the stock is rallying is that one of America's best activist hedge funds is loading the boat. Value Act Capital, which now has 22,704,955 shares. They own 8.9% of Rocket's outstanding shares. They bought another 2,977,000 shares between July 7th and July 11th at prices ranging between $13.46 and $13.94, according to Barron's. So they started buying the stock. Months ago, and now they're up to almost a 9% stake. And Value Act is interesting. They don't go in guns blazing, demanding things. They try to work with management first, and they're going to have to in this case because Dan Gilbert has 80% of the voting power. So Dan Gilbert, for those who don't know, owns the Cleveland Cavaliers and half of Detroit, like half the commercial real estate in Detroit. So there's some dilution. The float is going to increase because of Redfin and Mr. Cooper. So I don't know where that will leave ValueAct's position. And Dan Gilbert's voting rights will also dilute down to 65%. But an activist can't really do anything that he doesn't want to have happen. But I think probably they could both agree the stock price has been super depressed for a long time. And that's why I'm going to stick with the trade. Are you staying with it?
I am. It's breaking out. I don't sell breakouts.
You wouldn't sell it yet?
No, I should buy more.
I think if it falls again, which is possible, like I don't think Trump is really going to like all of a sudden be able to eliminate cap gains home sales. So the stock could easily fall back into the 13s. I'd probably buy more.
Well, also home builders rallied today anyway, so this was just a double dose of goodness. All right, I have good make the case. I agree with you. Obviously, as somebody that owns the stock with you. All right, I've got a mystery chart. Here we go. This is I guess it's a subsector. And it's been in the doldrums. It's been under pressure for the last couple of years as higher interest rates hurt
Home builders. I'd like to solve the puzzle. Home builders.
I love the confidence, but no.
Real estate.
No.
Energy.
No.
Hunter Biden.
That's it. You nailed it.
Wait, seriously? You said as interest rates are higher. That's not the hint that gave this thing away from me? What is it then?
That probably wasn't the best hint. This is I don't really know.
All right, give me a real hint. Oh, Jason Chen in the chat is saying regional banks. That was my next guess.
Not a bad guess. This is an equal weighted basket of names, and there's just been a lot of
a lot of conjecture.
A lot of overhang.
What is it? Enough. What is it? I lost.
It's XRT.
Who the fuck would be able to get that?
I didn't give great clues. I wasn't trying to clue it up. Anyway.
Oh, I make this so much easier than you make this for me.
Stop it. I'm a good guesser.
You are a good guesser, but I'm also a good guesser. But that was shit.
I just said those weren't great clues. I don't know. How have you clued that up?
Tee me up next time, bro. We're supposed to end this on a high note. All right. A reminder, new summer merchandise in the Compound Store. Go to www.idon'tshop.com. Obviously, no apostrophe, idon'tshop.com. Tomorrow is Wednesday. All new edition of Animal Spirits, my personal favorite podcast. The koala on screen is telling you to go ahead and subscribe to the channel. If you haven't already, we certainly appreciate it. And Michael and I together will see you at the end of the week with an all-new Compound and Friends. Thank you guys so much. Have a great night.